Well, howdy there, folks, and welcome into today's video. Today, I share with you guys my 3 worst stocks as of right now that are performing the worst. What am I planning on doing with these stocks? Am I planning on buying more shares? Am I planning on selling off these stocks? Am I planning on just holding? And why? And then after we talk about those 3 stocks, and I go in depth on those 3, okay? We're going to get into a stock that I am a little worried about that I think potentially could fall a little bit here in the future, and it could get maybe a little bit ugly, at least in the short term, around that particular stock. So I hope you guys enjoyed today's video. As always, it is important to talk about not just stocks that are going up, but stocks you're having trouble with as well. I feel like in the market is very, very important because, I mean, the back half of last year, right, of 2020 and into the first couple months of this year, I mean, it seemed like, you know, you put money in a stock and the next day it was already up huge, and the next day it was up huge, and the next day it was up huge, right? And so when we're going through a market in a time period where a lot of these stocks have been falling, you know, 30%, 40%, 50%. Some of these stocks, you know, are a lot more than that, right? It's important to talk about these, talk about going through this type of situation and kind of, you know, the moves I'm making out there. So I hope you guys enjoy this. As always, if you don't mind, smash that thumbs up button. That's all I ask in return for this video. I hope you guys really enjoy it. If you want to check us out in Stock Hub, that is our free Discord chat. Check out the first pinned comment down there in the comment section. If you were looking to join my private stock group and the private Discord chat and take advantage of all those things, check out the second pinned comment down there. Alrighty, guys, let's get into this. So first stock up here of the bunch of my worst stocks is Corsair Gaming. So this is in the main private account, okay? And I own shares in other accounts too, Corsair. So whatever you see for the loss in the stock, it's actually bigger than this. This is just like the most shares I own in an account because my main private account is obviously by far and away the biggest account I hold, okay? So when it comes to Corsair Gaming, we're down 25,000 in the private account here, right? And down 7%. So Corsair Gaming has been rough to us so far, okay? The way I look at this, right, and by the way, something very important I do when it comes to stocks, this number would be a lot worse than this if it wasn't for the fact that I've been able to like buy and buy and buy as it's gone down. Because something I don't like to do is just put all my money in a stock as soon as I start buying it, right? So I don't go like all in a stock in one day or something like that. I buy it in chunks. Now, in a raging bull market like we had in the back of 2020, that strategy doesn't work the best, right? Because if stocks are just going up every day, you got to pretty much go in the stock as soon as you buy it, right? All in, all in, all in, right? That's a raging bull market, but most of the time we're not in raging bull markets, right? We're in a market that just slowly drifts higher, slowly drifts lower, or, you know, just kind of stays, you know, kind of just, you know, not really doing that much. Let's just put it that way. So for the majority of time, that strategy works as far as, you know, lowering cost basis and things like that. And it's worked really well with Corsair so far. When it comes to Corsair Gaming, I look at this stock and say, okay, they're in front of the gaming industry, right? Huge player in the gaming industry when it comes to hardware, getting more and more involved in potentially software, subscription models when it comes to their business model, things like that. And I also look at this one, I look at the streaming side. They're becoming a huge player in streaming, specifically on the hardware side, but they're starting to get into more and more things on the software side as well as they're getting into more like adjacent businesses. They're buying out other businesses. And so I look at this company, I look at the cash flows this company's starting to provide. I look at the valuation of this stock, which is under a forward P of 20, okay? Now, a forward P under 20 in the stock market is pretty darn low, okay, especially in this type of market. Never mind when you're a company that should, I think this company can double their revenues over the next 5 years, if not more than double their revenues over the next 5 years. And if that's the case, you're trading at a forward P of under 20, it's almost laughable and it's a little silly undervalued. And that's the way I personally look at Corsair Gaming right now. It's a very undervalued stock. That's why I continue to buy it as it has gone down. And I will plan to continue to buy this one if it goes down. Now, in regards to Corsair Gaming, I don't own any options on the stock yet, okay? And the reason being essentially is right now when it comes to Corsair Gaming, they don't have 2023 options out there as of right now, at least, okay? It's kind of a newer company in the public markets, and sometimes it takes a little while for these companies to get up and rolling as far as the options market. So, you know, if let's say hypothetically, okay, let's go through a scenario here. Let's say Corsair Gaming continues to be weak throughout the summer, which I don't think is that realistic. I think the stock could start moving as early as this summer as far as moving up. But let's just say hypothetically throughout the summer, it stays weak. It stays, $31 a share, $30 a share, $29 a share, whatever. Okay. Let's just say it's something like that. And we go into the fall time. I think there's a high probability that this stock would come out with 2024 call options. Those I would be interested in playing at that point in time. Okay. So I'm keeping a close eye on it for something like that. 2024 calls, usually the 2+ year out calls usually come out in September or October. And so I would definitely be interested in potentially playing that. But as far as just a stock straight up, I'm definitely interested in potentially buying more and more of the stock, especially if it continues to go down and I'll get my cost basis lower and lower. In the main private account here, we got a $34.22 cost basis. I would love to get that to $33 or $32. Long term, I think this is a $100 plus stock. So, the lower I can get in, the more shares I can add, the better. So that's Corsair Gaming. As of right now, it's going rough for us, obviously. I think long term, it's going to be a huge winner for us. But time just has to pass to play that out, okay? Let's get into the second worst stock I hold in terms of the amount of money it's down, and that's Coinbase. So Coinbase is interesting. I'm down the second most amount of money, but this one's actually my worst percentage loser of all the stocks I hold, okay? Coinbase has been rough for us. You guys might know Coinbase as a crypto brokerage. They went IPO about a month ago or so, okay? And they had their big public offering, and it's just like the stock has just been down and down and down, and it's just not in a good place at the moment, okay? And we're looking at 311 shares I have here. This is the only count I own Coinbase in as of right now. And a 345 cost basis on this one. A lot of folks felt like we wouldn't even get this under 400. I definitely heard a lot of talk like, dream on getting this under 400. It's 243 today, okay? I mean, woo-wee, okay? When it comes to Coinbase, this is such an intriguing stock, I feel like, in the stock market, right? I mean, you're looking at a company that, oh my gosh, they have something like 9x revenues year over year. Their profitability is going crazy. Their margins are unbelievable. They have more and more clients signing up than ever before. The assets under management, the AUM's just gone like a skyrocket, right? Everything you look at for the business model is unbelievable. And you even look at what the forward P should likely be for this stock, and it looks really darn low for this company. It's absolutely insane. And yet, look at this stock. You got to be flipping my flapjacks. It's just gone down and down and down and down. Now, the one worry when it comes to, there's kind of two worries when it comes to Coinbase, okay? The first worry is that the crypto market in general is just a bad place, right? And just like it's not going to be a money-making place long term, and cryptos are overvalued, and they don't have enough utility and things like that. That's the first bear case you could make around Coinbase, is that it's all just like foo-foo stuff, and it's just nothing, okay? The second thing is that you could say bad about Coinbase is that they're in a business that essentially the margins could potentially erode long term, right? Because if we look at what happened with stock brokerages used to be like $20 a trade they'd be able to get, right? And then that dropped to like $10 a trade, and then like $7 a trade, then $5 a trade, then $3 a trade. And now, you don't sign up for a stock brokerage unless it is free, right? And it doesn't cost you a thing, right? And so when it comes to cryptos and them taking all those fees out and things like that, like a Coinbase does, which makes them incredibly profitable right now, there's definitely a lot of folks that worry long term about the profit margins for businesses like this, okay? I personally own Coinbase and actually have substantially more money invested in a company named Voyager, which is a smaller company that is led essentially by a former VP over at E-Trade. And I think, that company has a very bright future. But I also believe in Coinbase as well. I look at this company and I say, if you believe crypto's best days are today, then, I think Coinbase is a hard stock to own. I'll just be completely honest. However, if you are bullish on the long-term trajectory of cryptos and the crypto market, it's hard to be bearish on the stock. It's really, really hard to be bearish on the stock. So I look at my investment in Voyager, my investment in Coinbase as kind of like plays on the crypto market long term. Like if crypto continues to become a bigger and bigger community, more and more folks are attracted to cryptos and they have more and more utility, Coinbase, Voyager, things like that should thrive. Okay. Now, also keep in mind, Coinbase, specifically Voyager, those companies can get into more markets long term, right? It's not like they're just going to be crypto brokerages forever and ever and all of eternity, and that's all they can be, right? And so when I look at something like Coinbase, like, and Voyager, those companies are in let's call it the financial community, and those users are worth top dollar in the financial community. And so that makes it really darn intriguing. So when I look at Coinbase, I think I have to buy more of the stock. I think I got to get up to about 400 shares. I think I got to buy another 89 shares of this. Maybe I do it today, to be honest. I might get done recording this video and do it right now and buy another 89 shares of Coinbase stock, because I look at this stock and I say, wow, when I look at their profitability, when I look at the money pouring in, yes, there's a chance that literally right now is the best it will ever get for Coinbase. But what if that isn't the case? What if this is just the start for Coinbase? You know what I mean? Like, you just start thinking from that context, and it's just like, oh my gosh, man, when you look at the net income that's going to roll in for this company in 2021, woo, you want to talk about some big numbers, especially if you look on a non-GAAP basis. Oh my gosh, okay? So yeah, that's Coinbase. I'm likely to buy more shares, maybe another 89 shares. Now let's get into my worst stock of the bunch, and then we're going to get into the stock I'm a little worried about, okay, after we get into this worst stock, okay? So in terms of the worst stock I hold right now, it is the TTCF chef, okay, the tattoo chef. So this stock, obviously, I own shares of the stock in other accounts too. I think I own maybe, maybe 10,000 shares in the public account as well. So I have, I don't know, maybe like 55,000 or 60,000 shares of stock in total. And we're down, this is the main position I have, obviously, in the main private account, right? And so cost base on this one's $19. Let's talk about the chef for a moment. So when it comes to the chef, obviously this stock has been rough, right? Down 47K here in the main private account and down 5.55%, okay? So obviously it's been rough. So what I've been doing is I've been actually buying some call options in the stock, and those are actually doing really, really well, because I got all those call options the day it was trading at like $15 a share. Basically, my strategy with the chef when it comes to the call options is if this stock falls to 15 or below, I buy 2023 call options. That's just what I've been, what I was doing on that particular day. I think it was, what was it, April 20th or something like that. The stock just was like, bad, in a bad place, man. It was like $15 a share, and I was like, how can I not buy some call options in the stock when it's at $15 a share, okay? When I look at the chef, here's what I see. I see a company that's, if we look at the fundamentals of the chef, okay, we see a company that is growing rapidly right now, okay? We're talking revenues should be up probably 60% plus this year, okay? We're seeing the brand get more and more known out there than ever before. We're seeing them getting to more and more stores, right? We're seeing them get more and more SKUs in those stores. And so if you look at everything, we're seeing them build out a better employee force. We're seeing them buy out other companies. We're seeing them buy out factories so they can expand distribution, expand the product lines and things like that. So if you look, there's nothing bad you can say about this company on a fundamental basis, okay? Even the most silly, bearish person on this stock, and the short sellers, which this stock has attracted a lot of short sellers recently, woo-wee, do they have something potentially coming for them, okay? When it comes to the chef, okay, where was I at there with this one? Oh, the short sellers. Oh boy, okay. Even the most bearish person, you can't say anything about this stock if you just look at the fundamentals. There's way too much good stuff going on when it comes to this stock. That is like literally you have nothing bad you can say. And then you look at the balance sheet, we're talking 9 figures of cash on this balance sheet, okay? Woo! So this company's in a position where they can also, especially as cash flow start to pour into this business, which right now this is not a cash flow story. This is not a profit margin story. This is not a net income story. That's going to start in like 2023 and after, in my opinion. But as that does start up, then we get into a position where all of a sudden, oh my gosh, okay, they can start buying out more factories. They can start buying out more companies. We just saw the move they made recently with the New Mexico Foods company, right? They got it. I think they got a steal deal in that whole situation, in my personal opinion, okay? So And never mind that, this is a type of company that's going to attract the best of the best talent, in my opinion, because you look at the leader of this company, Sam Galletti, he's been in the food industry for like literally decades. And so when you look at like Sam Galletti, been in the food industry for decades, you look at this company, their growth trajectory, they're gonna end up attracting the best of the best workforce out there in the food industry. Because trust me, there's a lot of really good workers that work for some really large food companies that I'm telling you, they're bored out of their minds and they're looking to, jump onto the next big growth thing and the next company that's going to grow massively, right? Because there's a lot of folks that work at some of these old food companies that the companies just aren't growing and they're boring. And when you're a top level player, like, eventually you want to do something with your life and you're like, I got to jump over to this, other food company that's growing massively. And so they'll end up attracting the best of the best talent, I think, of the bunch, because you can't find a food or drink company that is innovating at the scale Tattooed Chef is innovating right now. And at the stage that this company's growing, you're not going to find another food company out there. I don't care where you look, a food or drink company for that matter. And so when you got that type of, they're in front of the plant-based food space, right? So when you think about it from that context, that's just an unbelievable opportunity. Now, in terms of me, when it comes to stock price around this, so I'm in a little bit of a tough position when it comes to the chef, okay? And here's why. Let me kind of explain this for a moment here, okay? So when it comes to the chef, I look at the stock here and I say, okay, I have, if we add up, all the money in different accounts, I probably have $1 million or so in this stock, right? And so if not a little more than $1 million. So then the question becomes, how much do I want to get invested in this stock? Do I want to make this into a $2 million position or something like that? And so that's where we get into like a tough decision around how big do I want to make the position? How big do I want to make it? Because it's already a really large position for me. Plus I got the call options in this stock. It's just a question of how much. The thing kind of worries me about the chef, okay, in terms of stock price, is not that it's going down more, because if it goes down more, big deal. Like, I'll just buy more shares for cheaper. That's actually not what worries me at all, which is kind of surprising, because most folks, they buy into stock, the thing they worry about the most is the stock price goes down in the short term. I'm not worried about that at all. I believe in this company so much for long term, and they've done nothing but, impress the fundamentals. I'm not worried at all about that. What I'm actually worried about when it comes to the stock is that when the stock starts moving up, it doesn't come back. And, it just starts skyrocketing, especially when I look at that short percentage and potential short squeeze situation. I look at the stock and I'm thinking, okay, when it does start to make its big moves, I don't think it's coming back to earth. Let's just put it that way. I think it's going straight to the moon for no better analogy out there, okay? And especially when Wall Street gets wind of this stock, right? They're somewhat still newer to the public markets. They've been in the public markets for like less than a year. But when Wall Street hops on, this is such a Wall Street stock. Oh my gosh, long term. Plant-based food company, growing rapidly, innovation. This is, something that will command a premium valuation, I think, for years and years and years to go in the future. And until this company ever starts growing less than 10% a year, it'll always command a huge premium valuation. And I can see them growing 10% plus a year for this entire decade. I mean, obviously right now they're growing like 60%, and I can see them growing anywhere from like 30% to 60% a year for years and years to go in the future, like the next 5 years at least, if not more than that. But longer term, like I can see this company still putting in, 15%, 20% growth numbers for so far out in the future. It's ridiculous. And so they'll likely always trade at a huge premium, in my opinion. And that's why I'm like, when this stock moves, I literally don't think it's coming back. That's all I'm going to say about that. Long term, I'm a believer that this stock will be $100 plus stock. And I'm willing to hold through whatever the whole situation is, down, up, anything like that. The shorts, the thing I worry about is the shorts will get desperate. I worry that they'll put out some negative articles about this stock. I'll worry about, and when I say like things out in the mainstream, maybe try to make up, they'll potentially use some really dirty tactics when it comes to this. I'm just trying to figure out how dirty of tactics they're going to really use. Short sellers, they don't have any more. Most of them don't have morals. They don't have ethics. They just they operate in a different realm, right? The majority of them, I've seen it before, and I've seen it, countless times. because when you're a short seller and that stock starts to move up, the losses are literally unlimited for you. It can take down your entire portfolio, your entire everything, right? It's not like, if you buy a stock as a long, right? And it goes down, it's like, okay, I'm down 20%, big deal, right? Your loss is limited when you go down. When the stock starts moving up and you're short, the loss is literally unlimited. And it can happen so fast too, especially when a stock is heavily shorted with the short squeeze. It gets ugly fast. So we're going to see how dirty the shorts fight in this one. I'm hoping it's a clean fight, but I am ready for anything when it comes to that, okay? If we have to go to war, we will gladly go to war, okay? So that covers my 3 worst stocks. Now let's talk about the other stock I'm a little worried about pricing-wise right now, and we'll go from there. So in terms of the other stock I'm a little worried about, that's actually Tesla Tesla, okay? So when it comes to Tesla Tesla, I'm not worried about going down in the stock, okay? I mean, this stock could drop 50% and would still be up huge, okay? That's not really what I'm worried about when it comes to Tesla Tesla. What I am a little worried about with Tesla Tesla is that the NASDAQ goes on a little downward spiral for a little bit, potentially. I'm not saying that's going to happen, I'm just saying hypothetically. And, Tesla goes to 400s or 300s or something like that. 300s is a little bit of a stretch. 400s, I've definitely, I've always kind of envisioned the stock being the 400s to 500s. Reason being is a lot of the hype around Tesla has really started to deplete out of this stock, okay? The long-term believers of Tesla are still long-term believers of Tesla, right? Myself and everybody that's a long-term believer are still long-term believers. There's nothing that's happened with this company that's made us say, we don't want to be part of this. But what I will say is, the massive hype around Tesla has really dissipated throughout kind of 2021. This stock hit a high of $900+, very, very early this year. And ever since then, it's just slowly been like a balloon deflating in terms of the hype cycle around this stock, okay? Now, I know a lot of people are playing different strategies around this stock for short term and things like that. I don't think it's the best option as far as, no pun intended, I don't think it's the best option in terms of if you're excited about a stock short term, because everybody knows like the numbers are going to be good out of Tesla. Like it's going to be almost impossible for Tesla to surprise the upside. Everybody knows the numbers are going to be great. And if they're not great, then that just is another bad thing, right? And so when the valuation's been pushed up to, well over $500 billion, right? And so this is a stock that I think potentially it could continue to weaken. You look at a day like today, NASDAQ's down like 1%, and look at Tesla, it's down 4%. It's down 4x the market essentially here today, right? It's just not a good sign. The hype, it's definitely been, the hype cycle's gone to other stocks. That's just the bottom line. Like the hype cycle's gone to other stocks or to the crypto community. And so when you look at it from that context, it's actually, I think, in a tough place for the next year or two. We'll see what happens. Maybe it goes back to 900. I honestly don't expect a lot for the stock over the next 1 to 2 years. I think the stock's just going to be in a range. I don't know whether, maybe it's $400 to $700, maybe it's $300 to $700, but I just think it's going to be kind of range bound for a year or two. And then maybe it's got a lot of catching up to do. I mean, this company added, at the peak, it had added $750 billion of valuation in a matter of literally months. That's the type of number that's just, it's really, really hard to even fathom in the brain, like how big that number is, right? So that's kind of what I'm thinking about when it comes to Tesla Tesla. And we'll see what happens with this one over time. But obviously, I'm long-term bullish on the company still. I just think from the short-term perspective, it definitely has some things to think about. So anyways, hope you guys enjoy this. As always, make sure you subscribe to the channel if you're not already subscribed. If you don't mind, smash that thumbs up button. That's all I ask for in return for this video. Much love as always, and peace.